KG back here with me in the studio. Diane King Hall joining us from New York. Our senior markets correspondent says we've got some fun earnings too. Not giant ones though. We're going to talk some shoes and stuff. We were talking, KG, in our discussion that it seemed like there was some logic maybe to try and ramp up into the close with inflation tomorrow. Those numbers have been going our way, but boy, we couldn't even pull that off.
Yeah, I mean, we kind of talked about it too, right? At the end of the day, we ramped up too early, and that's exactly what happened. That 54.50 level was a key area, and it was already that was already a 20-point move, 15 minutes, 20 minutes before the segment, and so we hit some resistance, and we just failed ever since. I mean, 50 points in a matter of 30 minutes is a significant amount of dollars just churning in this market. Now, hitting a key area, 5,400, that's that negative gamma level that we've been kind of focusing on. And tomorrow is going to be laying the groundwork for us as far as PCE. And if we get a decent print, what does that actually mean for the equity market? I think that's going to be the biggest question. Alex Coffey actually had a really good comment when I was talking to him. Is a good PCE print, as far as it actually coming online, is that going to be healthy for the market or not?
Right. Well, it depends if you are in regional banks and real estate and the Russell. And actually today, Diane, there's a pretty decent list. Energy, industrials, financials, materials, all higher. It was better earlier, of course, but there are a few ways to thread this needle right now that are working pretty well.
There were, and especially kind of the continuation of that theme that we're seeing of this rotation trade, and is this kind of the passing of the baton of who's next, right? The Russell continued to lead today, as we've seen recently. That pattern continued with the mega caps being rotated out. Even NVIDIA lost ground. It was lower earlier, then it came back. Now it ultimately lost ground. Meta finishing down, Microsoft finishing down, Google also finishing down. But again, you're seeing that bid continue in the Russell as the theme behind that, or the thesis behind that, they stand to benefit the most from a move from the Fed. And especially, yes, PCE is not really, it doesn't seem to be a factor today. I heard you talking to Joe about that earlier. Doesn't seem so much to be a factor today, but, kind of why go against what has been working, at least recently, in the very short term?
Yeah, no, that's true. Hey, Tesla actually held up positive today. I'm just kind of glancing through some stuff that worked, but it's really been the banks. Some of the healthcare stuff has been solid, but really healthcare was a little bit lighter today. But the banks did really well, and some of the cyclical stuff we've been talking about, Kevin, that's working. I mean, the way they're like hiding out in the regionals and stuff, I mean, is fascinating to me. Another 2.5% there today.
Yeah, well, it's going to benefit the regionals here in the near term, right? Because it was actually balance sheet risk rather than trying to have growth. Now, at some point in time, the investor community is going to shift, and they're going to say, okay, how are you actually growing at this point? But we're not there yet. They just want to see that first cut, alleviate some of that pain that they've seen, or that stress that they've seen over the last couple of months, the last couple of quarters, actually. So I think you're seeing that type of trade. And if the regionals fade, it's going to be very hard for small caps. I think that rotation's working right now just because of the flight to these underloved sectors. But at the end of the day, if we do have an economic slowdown, it does make it a lot more difficult for those companies that are not able to generate cash flow to be able to survive. That's
the catch right now. As we were talking about with David Newhouse earlier in the show is, there's a lot of things in the market that look very optimistic about the economy, but then employment's going the wrong way. So it's hard to think that that's going to suddenly turn around. I mean, look, anything's possible, but right now we've got general indications that we're not falling off a cliff. That was kind of David's assessment to us, Diane, as well. Even he's generally kind of pessimistic longer term. His point is there's no cliff that's obvious right here. And in some ways, people taking money out of tech to put it into other stuff, it could be a very functional thing.
Yeah, and then you hear analysts talking about the risk even of having too much in cash, especially with the expectation of where the Fed is going to move next, right? Investors have had funds parked in cash and cash equivalents because of the rate of return they're getting from where interest rates are now. But with the road ahead, that doesn't look like that's going to be the best place to get the best return if the Fed moves as the market anticipates it moving.
Good point. If we did get all those cuts, then suddenly maybe some of that market money will start moving around. Should we talk some cinnamon? What does the Texas Roadhouse have that everybody's talking about? Because I haven't been there.
Steaks.
They got steaks, I know.
It's out.
Cinnamon butter with the roll, says the producer Alex. Okay. I've
been there once. Go ahead.
I'm an Outback guy, so I don't know. I never did Texas Roadhouse.
I liked it, but they're not really around here. Like the closest steak place is like Capitol Grill, so in the Darden family here.
Right.
But I've been to Texas Roadhouse and I like it. I know Alex talked about it earlier. I like it. Well, I'll quickly just run through some of the numbers. EPS was $1.79 a share. That beat expectations. Sales pretty much hit the number. Revenue was $1.34 billion, so that nailed, like that was in line with expectations. Comps rose more than 9% overall at company stores, and then when they look at their franchises, those rose a little over 8%. So those are kind of the first blush numbers that I'm seeing from Texas Roadhouse, and we know that some investors have been hiding out there when you look at the restaurant space, especially because we know there are challenges within that space, and as consumers become more choosy about where they're spending, what's the restaurant chains and companies that tend to benefit the most?
Correct. That's really the big question, because to your point, with some of Darden's higher end stuff, the stock hasn't done great. If you think about even the way the market faded Chipotle after its earnings too, like this group, they're kind of dropping like flies lately, KG. But Texas Roadhouse, man, up 40%, right, on the year, something like that. It's crazy. This is like one of the sleeper best stocks of the year.
Yeah, and they continue to grow, especially not only just looking at top line, but also bottom line growth. And their margin strategy is actually what has set them apart from its peers. And you continue to see that on a quarter by quarter basis.
Even with the buttery rolls.
Yeah, well, that's probably what everybody's getting.
That's
filled
the
up
loss
on that.
leader.
Yeah, that's what's driving those margins there. They did say restaurant margin increased, dollars increased by 32.7% for the quarter. I mean, everything is on a year-over-year basis an increase here. They're doing the right things. They're doing stock buybacks as well. Maybe not as aggressive as we've seen other companies, but it's something that's still in their back pocket that can support prices in the near term. And once again, I mean, the stock's been doing a very phenomenal job, and it'll continue to do so as long as those the fundamentals in the near term, match up with the price action.
What about the fact that they remade Roadhouse the movie? That Jake Gyllenhaal flick with Conor McGregor. Maybe that got mixed in, in the social media. Roadhouse.
Who knows? I mean, look, they talked about they saw strong traffic. I mean, that plays out when you look at comps. They also pointed out they had some relief in terms of their inflation input. So commodity inflation, they saw some reduction of that. So that to them, they said, led to more profitability across their verticals. And they're growing globally, too, which I will admit, even though I know Texas Roadhouse, I didn't realize how international they are.
Wow.
Which they have, several dozen international locations.
All right. The Roadhouse appeals globally. All right, so we'll add that one on our list to do group team channel checks. Let's talk Deckers here for a sec. I've done the channel check. The shoes are just like flying off the rack the last year. HOKAs have been a massive success, but the stock has faded since the last report. We also saw some cracks in on over the last couple months too. A few of these shoe trades. I don't know what it is. Why have they been doing so well generally, KG? Is that a price point people are happy to spend, splurge a little bit, get a $100 pair of shoes, or maybe go to the discounter where you can get a lot of HOKAs? What's the story? How come it's been such a good trade?
I mean, I guess that's the reason why. I mean, they
love the shoes.
Well, they have a different strategy than, say, a Nike, right? They're focused more on niche markets, and then also they're focusing more on that direct-to-consumer business. So they have a little bit more control when it comes to dollars, and I think that's another reason why we saw, the stock actually perform very well. Now, the other side of that is wholesale. And how is their wholesale business going to hold up here if inventory levels have been elevated at certain areas?
You don't want to see too many of these in a Nordstrom rack.
Exactly, because that's when they're pushing margins down.
I'm telling you, the on top, I said here on the show like a week before, I was like, man, these things are all over Nordstrom rack, because I was scooping them up. There were so many of those shoes, and they were great. And that was where, these companies have to be careful. They don't want to spread it too wide, Diane. You got to keep a little bit of exclusivity.
It's true. Well, HOKA you don't see. I haven't seen it at the off-price stores. So HOKA maybe continues to have some of that cachet. Okay, so maybe you've seen some out in the wild, but I haven't seen it. I have seen Brooks there.
Too much.
I I do love Nordstrom Rack. Just really quickly, we'll go through the numbers just for, just to give people kind of the headline numbers. Adjusted EPS, $4.52 for Deckers. Revenue was $825 million. So both of those were a beat in terms of what was expected. DTC, direct-to-consumer, rose 24%. Wholesale, KG was just talking about that. That rose double digits as well, 21%. They saw growth in both domestic and international sales. So that's a good sign, especially when you think about domestic and the sagging consumer that we've seen at some companies. HOKA continues to be their standout. We expected that. HOKA sales rose more than nearly 30%, we'll call it. UGG rose 14%, so that's still a standout for them. So UGG, one of their strong brands, but nowhere near the level of HOKA.
Yeah, maybe like some seasonality element. I don't know. Like, are there Uggs that you wear in the summer and stuff? I don't know. My shopping expertise stops there.
I've been seeing, this is a quick tangent, I've been seeing, and I'm, past, I guess, trends, ladies wearing boots in the summer. I do not get it right now. I've been seeing a bunch of this.
Because they're going to Texas Roadhouse.
I don't know.
Right? That's huge growth for HOKA. No, I love it because actually I think that the shoe thing has been so fun to follow because a few of these companies have just like taken the whole market by storm. HOKA's been one of them. I bought my mom a pair. She said it was the comfiest running shoe she's ever had. 30% still? I mean, like, how much can they punish this stock more than they have in the last quarter when the numbers are still cranking for this brand?
That's a good question. Actually, I don't really follow the stock all too often, to say the least here.
They got slammed for like a whole quarter.
Yeah, it sounds like there's just a little bit of a transition of trends. And, we can even broaden it out to say like Abercrombie and all of those names too, right? We might see a little bit of a rotation in fashion. And so that you have tailwinds with that. And as soon as that fashion trend is over with, that's when you kind of fade. And, the Uggs, maybe you're wearing Uggs in the summer. I don't know. Right. I don't know about that, but maybe they do probably have some seasonality when it comes up to the winter, and maybe they're going to try to provide that type of forecast here in the near term. Last thing I will say, nice little pop after hours, Oliver. Yeah. They're back where they started the week, pretty much.
Okay. So. All right. Yeah. Good context on the chart. I feel like it's a good quarter. I mean, beating the outlook too. Clearly, the analysts got a little bit too kind of negative, maybe with some of the price action. One way to though help your stock is also to buy back shares. We're going to look at Skechers real quick since we're still talking shoes. They pulled back the last couple weeks, but they're doing a $1 billion buyback, it looks like. So that's going to help a little bit. But, Skechers to me, I don't know. I'm not as... This to me feels like very much a like DSW designer brands kind of discount. Like I see them everywhere. But is that kind of what they want to be, Diane?
I suppose so. I see your point. I mean, I don't know. I don't know Skechers as well as I know Decker and the HOKA's brands, but Skechers, in terms of their sales, they came in at just shy of $2.2 billion. DTC rose. I didn't even know they sell direct to consumer, so that rose more than 9%. Wholesale also increased, but coming into this report, I saw some bullish sentiment coming into this. TD Cowen had put out a note earlier today with a buy rating. They maintained a buy rating. They had a price target. Now they did reduce their price target. They reduced it from $79 to $76 a share for their price target for Skechers.
All right. Stock trading closed at $63.71. Kind of unch in the aftermarket here. To your point about direct-to-consumer increasing, seems like the bulk of their initiative is already kind of built out, though it's slowed down a little bit. They were doing double digits there a year ago. The earnings came in a little bit. I mean, it seems like still both these companies, Kevin, are kind of in our spending range right now. The consumer hasn't eliminated them from their budget yet.
Yeah, I mean, if you compare the two, Deckers, and then what we saw from Skechers, Deckers, knocked it out of the park. Yeah. Skechers, it looks like they actually missed on the top line, if I'm not mistaken, by a little bit. Okay. Here's my question here. $1 billion buyback for a $9.7 billion company. I mean, you're talking about 10%.
It's going to move your stock.
And it's not.
Yeah, it's bizarre.
That's the problem. And so that's when you know that you have a mixed result here, and even trying to sweeten the deal by taking off 10% of the shares that are out there for float. That just signals that maybe we might have some some additional weakness potentially for this thing.
Okay, all right. Should be doing something, and it's not. So, okay, understood. Thanks, Diane. Thanks, Kevin.